Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, Midas Gold reported what it called the best ever gold intersection at its Stibnite project in Idaho. Why did the market yawn?
Well, this hole, number 421, was indeed the best hole ever pulled by the company from this project. 216 meters of 3.24 gram per ton gold and 0.3% antimony. Now, the reason the market yawned is it's because this hole was drilled inside the existing Central Yellow Pine resource. And the implication of it is quite subtle. Most of the holes have been drilled in a southeast northwest orientation to properly assess the fabric of the primary mineralization within these deposits. However, the company's geologists observed that a set of antimony-enriched veins is actually oriented differently. So the historical drilling on this project will have been drilled subparallel to these veins and their gold and antimony enrichment. So this hole was drilled in the opposite direction so that it could properly assess the true width of these veinlets and come up with a better assessment of the zone. Now, the one of the disappointments the company delivered to the market when it completed its pre-feasibility study a couple of years ago was that they lost 100 million pounds of antimony that they had teed up for production in the preliminary economic assessment. And the reason was that they could not rely on legacy drill holes at the level of accuracy required for the pre-feasibility study, and they didn't quite have the drill density. So this drilling that they're doing now is part of this campaign to bring these lost ounces and antimony pounds back into the resource model. So it is a very significant development, and what's also quite encouraging about this hole is that there are no really high-grade gold spikes within it. Often when you get a long intersection such as 200 meters, you will get some 1.5 gram reported by a company, but often this is with some very narrow high-grade spikes. The company did not isolate any such high-grade spikes. The smaller intervals where the antimony did get to 1%, the gold only went up to 5 grams per ton. So this is really good. This adds a lot of ounces to the resource model, but of course we already have a $400 million valuation for the company. It's at 95 cents. They're working on feasibility level work and permitting work for a 300,000 ounce per year a production scenario. But as I pointed out in past Discovery Watch comments on this company, there's a nearly $1 billion capex associated with this project, and we really need $1,600 gold for this project to go ahead. So gold has been doing well this week. It's above $12.50 today, and this is good for the Midas Gold Company. But it needs to get over $1,400 for the market to really start getting excited that this project, when it is ready for a construction decision, deserves to be put into production. And so the news that came out, it adds to the confidence of the existing shareholders, but it doesn't represent a reason for anybody to flock to the company, because this is not really a new discovery, such as, say, a significant zone outside the area that's been targeted for development.
Last fall, Sodito Resources raised $5 million U.S. for bulk sampling of its BK16 diamond pipe in Botswana. Has work begun on BK16?
Last week, the company announced that it had started a 3,000-meter drill program, core drilling program, essentially 14 pilot holes for the large diameter 24-inch bulk sample drill program that will be undertaken later this year. Now, this step is very important because the large diameter drill bit basically grinds up the kimberlite into lots of little pieces, and it's very difficult to do any petrographic work to analyze what unit does this represent. And based on the delineation drilling that they did last year, they have a pretty good resource model for the various units in this pipe. And of course, the history of this pipe is that most of the historical bulk sampling has been done in a unit that was heavily diluted by country rock basalt, and so the grades they ended up with were abysmal. They were below 5 carats per 100 ton. Work that they have done since then leads them to believe that most of this kimberlite consists of higher grade units that haven't been diluted by country rock, and 2 of these units are the focus for the large diameter drill program. So by drilling these pilot holes, they get a core sample that enables petrographers to with great detail and precision analyze, okay, when are we coming in and out of the different units? And of course they will know when they do the large diameter drill program, for every meter that they get, they will have a perfect corresponding sample of core where they know, okay, whatever macro diamonds that we get out of this out of this bulk sample material, we will know what unit that correlates with. Because even with a large, widely spaced, large diameter drill program, a lot of coming up with the resource model and decision ultimately to put this into production is being able to map the diamonds that you're collecting from this particular unit to all the surrounding units. It's very different from drilling off a gold or copper deposit, especially because the units that they're targeting have these type 2A diamonds, the very large kind, like the Lina de Rossetti of Lucara from its Corot pipe, 1100 carats. This pipe has been demonstrated to contain these large diamonds. And so the purpose of the bulk sampling program later this year will be to demonstrate that grades are 15 to 25 carats per 100 ton, and that indeed these type 2A diamonds are present in a meaningful manner. As an aside, we've had some pretty disappointing news from Mountain Province on its Gaucho Quay project, where the general run of mined diamonds are fairly low quality, and they've had a problem selling them because in India, because they decided to demonetize in the sense of getting rid of larger bills in an attempt to stop the corrupt culture that keeps India from really flourishing as it should. But this has resulted in a substantial fall-off of demand for the smaller, lower-quality diamonds that the Indians specialize in cutting and polishing. So Mountain Province was unable to sell a good chunk of its production in the past month. And, of course, we've always known that these lousy diamonds make up the bulk of the grade at the Gaucho Quay system. However, the Gaucho Quay system has the ability to cough up very high-quality, large stones here and then. And they had a few in the beginning, but we have not yet seen sufficient evidence that these large diamonds are present in a systematic basis, such as was demonstrated by Lucara with the Corot pipe. BK16, we already know that there is a type 2A diamond subpopulation present in these pipes. They're very difficult to measure using traditional microdiamond analysis, and so this bulk sample program that's coming up this year will go a long way to establishing whether this is a somewhat smaller version of Corot that will produce these large, high-quality type 2A diamonds.
Cleantech Holdings has jumped higher since last week's Discovery Watch discussion about the Syerston project in Australia. Are there any new developments on the scandium front?
There are no new developments on the scandium front, other than that, people are becoming more aware of scandium and the role that it will play for aluminum down the road. But what's driven Cleantech as high as 85 cents in the Australian market that closed last night is the skyrocketing price of cobalt. Now, the Syerston project is a nickel-cobalt system with a lower grade scandium a byproduct, surrounding which is a much lower grade nickel-cobalt halo, but where the scandium grade is enriched. It ranks up there as the richest large-scale scandium deposit in the world. And what CleanTech did was it did a feasibility study last year for a small-scale, sort of 200, 300 ton per day operation that would produce about 40 tons per annum of scandium oxide. And they submitted a development consent modification to allow them to include scandium as either a primary product or as a byproduct from the nickel-cobalt operation. But with the growing awareness that cobalt is a substantial component of lithium-ion batteries in the whole electric car industry, there has been a substantial rise of interest in cobalt. So the company went back to its nickel-cobalt scenario, which would be a 7,000 ton per annum operation, and did a preliminary economic assessment or pre-feasibility study for it that would possibly include scandium as a byproduct. And this showed that if they can produce a clean enough nickel and cobalt sulfate, they could sell that directly to the battery manufacturers. And as part of Robert Friedland's sort of clean future narrative that electric cars are going to become a dominant force in the future, and they're going to use a lot of copper wire and so on. But more interesting in this case, it's going to be cobalt, of which half of the world's supply currently comes from the Congo. And in the Congo, film footage has surfaced showing the military absolutely massacring people to the point that this is creating an extreme outrage. It's helping to destabilize the Congo. But today's Financial Times has an article about how hedge funds have been accumulating cobalt inventories, and this has caused it to rise from sort of $12 a pound in August, September last year when CleanTech put out its pre-feasibility study, and now it's breaking $20 on the upside. The Teslas of the world are starting to panic and move into the cobalt spot market to accumulate these supplies. So we may have a scenario similar to what we had in the mid-90s, where cobalt went to $50 a pound because of problems in the Congo, the civil war and all that which was going on there. So I would say to a large degree, the rise in the price of CleanTech is due to the cobalt component, which has been sort of, nickel has been the primary component, but it's sort of the second most component of the large-scale scenario. This interest in finding a large-scale supply of cobalt outside of the Congo, this is what's driving the price in CleanTech. And I did have a long chat with the company's Chief Technology Officer, John Carr, and he clarified that with regard to the scandium, if they get their development consent modification, this will allow them to either proceed with the large-scale 7,000 ton per year nickel cobalt with possible scandium byproduct scenario, which would cost $700 million US to develop, or they could decide to proceed with the smaller scale scandium only from the scandium enriched portion of the deposit and just do that. My feeling is that they are really looking at the larger scale scenario. They would still have to apply for a mining lease. If this cobalt situation is not going to rectify itself overnight, Congo is not going to become a stable part of the world. The electric car industry is going to keep growing. Demand for cobalt will rise. So basically, in a sense, they have seeded the race to be the first primary scandium producer to Scandium International, which is still waiting for its mining lease, just as the Cleantech's still waiting for its development consent modification. And so they probably would not be producing any scandium if they so choose to include it as a byproduct until 2020 or beyond. So Cobalt is the story, and there's probably a scramble afoot now for other cobalt juniors now that we're seeing this problem with cobalt supply achieving critical mass.
Discovery Watch with John Kaiser. We'll be back right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're talking with John Kaiser. John, are there any new Discovery Watch juniors you'd like to introduce?
Well, the junior that I would like to introduce today, Camino Minerals, is also a bottom fish recommendation, and it has just raised $2 million through a private placement that ended up being so oversubscribed they doubled the size to $2 million. The funds are earmarked for the Los Chapitos project in Peru. Now, there's some really interesting background to this company. It is the spin-out from Canplatz, which was acquired by Goldcorp in 2009 for the Camino Rojo gold discovery in Mexico. Now, this discovery has an interesting history. There's a couple of sort of prospector geologist legends called Bud Hillmeyer and Perry Durning, who have been responsible for a number of major discoveries, including Pitaria for Silver Standard. They've worked a lot with Silver Standard. Canplatz was sort of a relative of Silver Standard, spun out at one point. And the Camino Rojo story is actually worth repeating because what had happened is they were driving along the road in Mexico, and they noticed this interesting-looking aggregate being spread on the road by the laborers as sort of, repaved the road with new rocks. So they picked up some of it, and they liked it so much they got it assayed, and it came back running a very significant grade of gold. So they went back and said, "Where are you guys getting this?" And they were getting it from some nearby quarry. So Canplatz acquired the project and did the basic geological workup, and lo and behold, made this significant discovery and ended up with a $300 million buyout. Now, Camino ended up keeping the rest of the Canplatz assets, and none of them really worked out. And a couple of years ago, the company bit the bullet and did a 10-for-1 rollback that wiped everybody out. But then Ken McNaughton, who'd been the VP of Exploration for Silver Standard and also for Pretium with its Brucejack project, he decided that he had had enough of working for these bigger companies and wanted to be in charge of his own new company. So Gord Davis got him on board the Camino, the rollback Camino. He became CEO, and he brought Bud and Perry in as consultants, and they rustled up several projects that the company has been working on for the past few years. One of them was a sediment-hosted copper play in Peru called Red Bed. They recently decided that they would drop the option portion and just put the stake portion on care and maintenance. They ended up having difficulties with the local community getting access agreement, and if you cannot get an access agreement with the local community in Peru, you're pretty much dead in the water in ever getting a drill permit from the government body. And on the Plata Dorada project, which they it's a high-grade, sort of narrow-vein mesothermal zinc, lead, silver, gold system. It's not a priority for them right now, but what was dear to Bud and Perry's heart was the Lost Cabin project in Oregon. And this project, they believe, has potential for an epithermal gold-silver system, and they see showings here and there on surface, nothing to really put together any sort of deposit. But they think that if you get down to about 200 meters where the boiling zone is likely to be, you could find some very high-grade, structurally controlled bonanza zones. And so they applied for a drill permit a year and a half ago, because the whole area was, or part of it was being included in the sage-grouse withdrawal ruling. And the sage-grouse thing is a big deal in western United States, because the sage-grouse, they live in the same sort of habitat where you might find sage-grouse. They have this peculiar mating dance they do in sort of like springs, dried up springs called leks. And the anti-mining lobby has turned protecting the sage-grouse into a stealth strategy for sterilizing much of the western United States from commercial activity, and mining hardly disturbs the sage-grouse at all. It's more aimed at ranching and so on, but mining ends up being roadkill. And so they applied, they actually got it. It was a more serious BLM approval process than normal, but they got approval for it last year. They have 2 years to drill this project. However, the $150,000 they want to throw at it, they're not going to do it from this financing. They hope to be able to raise more money later this year. And so this Lost Cabin project is a make or break drill program. They'll go in there and drill a couple thousand meters of RC holes in there, and then see whether or not they have the high grade bonanza zone. But the new focus, Los Chapitos, that came to their attention in the second quarter of last year, when they were pursuing another project in Peru through one of their consultants there. And the consultant said, well, if you like this type of system, you should take a look at this other project here that a junior once had, but the vendor took it back and has been trying to sell it for some time, but he's been asking too much, and you should take a look at this. And so they went and checked it out, and it's an IOCG type of system, an iron oxide, copper gold type of a system, and there's one similar to it called Minas Justas or Marcano to the north along the coast, 370 million tons of 0.71% that's going to production. And so they did a deal with this vendor to acquire 100% of this project. And it's kind of an interesting type of analogy, because back in the 1995, David Lowell's Arequipa had picked up all kinds of properties in Peru, and they were working on one when the consulting geologist, I think his name was Freddie Prince, said, well, if you like this kind of stuff, I want to show you something that's even better looking. And he led them to the Perina outcrop, which became the basis for a $1 billion buyout by Barrick, and took the Arequipa stock from whatever buck or so where it was to $29 buyout. So it's one of these serendipity type of scenarios. Now, they will go in there with a drill program starting in a couple weeks. They expect to be done by early April. They will be able to see with their XRF unit whether or not they have the copper in the core. In these IOCG type systems, the context is one where in the basin to the east, it's evident that fluid flows has generated brines which have harvested metals out of the sediments, and in the rocks here, where they have the Los Chapitas project, they are the right rocks, and they have to have absorbed like a sponge these metal-enriched brines, and they have surface showings in the eastern part of this target. They also have showings in the western part, but they've chosen to do the eastern part because they have managed. It was outside the area where they needed to get access agreement with the local community, which they have since obtained for the western part. But the initial focus will be the eastern part of this project. So we could know, assuming that they do get the drill program started, we should know in April whether or not they have a significant IOCG discovery. The financing that was just done, it was 10.5 million units at 20 cents with a full warrant at 25 cents. However, there is an acceleration clause. If the stock closes at 35 cents or higher for 10 consecutive days, then that 2-year expiry date gets accelerated to being within 30 days. So they could get that another financing coming into the company very quickly and take care of this dilutionary overhang. When you have a hot prospect, this is the best way to structure a private placement warrant, is you have an acceleration clause, so you don't get this awful scenario where the placees, when the stock comes free trading after 4 months, blow out the long position and then just sit on the warrant and never exercise it unless they're caught short and the company stock price ends up much, much higher. So Ken McNaughton, this is his first major play where he's super excited outside the whole silver standard orbit, and Camino Minerals and his Los Chapitos are our new Discovery Watch project.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.